In part two of the book, we will now start to prepare financial statements. So we will so all the information that we learned in part one from the accounting equation, then creating the double entries, closing off the accounts, and then preparing a trial balance. All of this then leads to the financial statements being prepared. The financial statements that we would be preparing would be the trading and profit and loss account and the balance sheet. So first, if now in this video, we'll continue with the trading and profit and loss account. So these are all the objectives of what we need to learn in the trading and profit and loss account, primarily being what is the profit, cost of goods sold, gross profit, and net profit, difference between the gross profit and the net profit, and then the trading account and how to then create the trading account and the profit and loss account. So as we learned in the previous chapters, the purpose of any business, the reason of its trading is to create a profit. So an owner would then like to know at a period end or a year end how much profit the business that he has run has made. In most cases, it is a profit where the receipts or the income is greater than the revenue, than the expenses. However, if the business is not successful, the expenses might be more than what money it's earning. So that could then result in a loss. Here are some benefits of why profits should be found out and what information it can give to the business. So it's because of you can plan ahead. To obtain loans from banks and other businesses, you would need to find out how much profit a business is making. Telling prospective business partners how successful the business is. So if you're looking to get in new partners or people to invest into your business, you need to show them, like, how profitable the business is for in order for them to then invest the money in the business. Telling someone who might be interested in buying. So if you just want to completely sell off your business, then again, how much profit the business is making is key in the decision. And then lastly is calculating the tax due. So every business uh, has to give profit back to the authorities. So, and the profit is calculated on the tax. So that's another reason why you need to know the profits. We'll move down to the first concept or so. For now, we do understand what a profit is. Profit is generally income minus expenses. However, there are two types of companies or businesses that are generally trading that generally perform. One is a trading organization. A trading organization is any business which would trade in actual physical goods. So where there would be a transfer of actual tangible goods which you can touch and feel. So, an examples of these could be uh, maybe a furniture trader, a shop selling toys, a garment manufacturing factory, or any such thing where it's an actual tangible goods. The other type of organization would then be service organizations, in which they do not trade goods but they would trade services. Examples of this could be a school where they provide teaching. Another could be a consulting business where they provide advice to other people. Uh, could be a sports teacher where the sports teacher actually teaches the uh, students to perform work rather than selling them any specific actual goods. So that is the difference between a trading organization and a service organization. So for trading organization, an important concept is the gross profit. So this is the profit in excess. So gross profit is anything which is excess of sales revenue over the cost of goods sold. So people would like to know how much they have actually made on just selling those goods without taking into account all other expenses such as rent, heating, lighting, etc. So gross profit would then tell the owner or any business user how much of profit has a business made just by buying and selling those goods that they trade in. Apart, so there is no mention of the overhead costs. So the formula and this gross profit is found out through the trading account. So the simple formula for gross profit is sales minus cost of goods purchased. So sales minus the purchases is simple terms, but then we'll find out what cost of goods purchased actually means. So in this example, like if you look at 7.2, the first question, in order to find out the gross profit, we need to subtract sales from cost of goods sold. So the answer here then would be 855. So this is the simple way of how to find gross profit. There's another concept of called net profit. Now, net profit is all the profit that the business would have remaining after deducting each and every single cost that it incurs. So, in addition to a cost of purchases, a business would incur other expenses in the running of the business, such as rent, rates, utility bills, heating, lighting, stationery, etc., etc. So in order to so once we find out the gross profit, we need to subtract all other expenses and then come up to a figure which would be the net profit, which would be the final profit that the business would have left over with it. So uh, the formula here for net profit calculated in the profit and loss account is what is left of the gross profit after all other expenses have been deducted. So if you look at example 1 above, 9820 minus 10676 minus 9820, we got a gross profit figure of 855. After that, the business had other additional expenses in terms of office equip of building and heating and lighting, which totaled up to 2622. So we'll subtract 2622 from the gross profit that we had, which would be 855. And as we can see, 855 is less than the expense, and expenses are more than the gross profit. So we would have a net loss of 1766. Now, there may be some other activities which the business may produce apart from selling goods, which would lead to revenue, such as maybe, so if it is a manufacturing company, they might kind of like give advice to other companies to manufacture goods as well. So that would then form part of the profit and loss account because it does not involve trading of goods. So in that regard, there would be an additional income which would have to be added to the gross profit. So if we look at example B, on the top we find that that for example B, gross profit of 6777 is made after deducting uh, the the sales from cost of goods sold. So if we take the 677 figure amount, we'll then add the other revenues to it and deduct 2888, which will give us a net profit of 8257. So that is how you calculate net profit on a general term. Now we will start to plot down the trading and loss accounts. So the information that is needed to prepare trading and profit and loss account is the trial balance, which we learned to prepare in chapter 6. So we will generally obtain a trial balance in this format. Then we have to kind of select which accounts would go into which, into either trading and profit trading account or profit and loss account. So the first step would always be to look into the trading account, and the trading account will help us find gross profit. In order to find the gross profit, we need two things from this trial balance. It would be the sales and then it would be the purchases. If any trial balance does not have sales or purchases, we would it means that it is not a trading organization, it is a service organization. So we will directly go and continue with making a profit and loss account. So here, in this case, if we look at take these two figures, sales minus cost of goods sold, because it would simply be 38,500 minus 29,000. Now, one thing we need to keep in mind is that whatever purchases we made during the year, it is not guaranteed that they would all be sold. There might be some stock left over in our warehouse or in our shop, which is still remaining and which we could sell maybe next year. So that is generally then called the closing stock. So whatever stock of purchases that is left at the end is called our closing stock. And how do we find a closing stock? We either find the closing stock by we would find the closing stock by counting the number of like the quantity and multiplying it by the cost price, which will give us a closing amount.